today Nuvama has upgraded SBI Cards from to a buy, actually, to a buy rating. My colleague Mihika joins in to give details.
Nuvama has upgraded its rating on SBI Cards from a reduced to a buy. It's also increased its target price to 850 rupees versus 620 rupees. So when you talk about, the implied potential when you compare to the previous closing price, the new target price implies a 17.5% potential upside versus a 14% downside that the earlier target indicated. Now, why has Nuvama updated SBI Cards? Well, it's based on the back of improving credit cost outlook. Just to note, credit cost is basically the amount spent to maintain credit quality, and this was a key driver of the company missing estimates in the past. But Nuvama states that the credit costs have likely peaked in Q2 FY25. They expect the credit cost for SBI Cards to be stable in Q3 of FY25 and start improving from the fourth quarter of the financial year. They also expect the credit cost trajectory to improve because their weak credit cost cycle came in much earlier when you compare it to peers. Lastly, Nuvama has also stated that the October 2022 RBI Master Direction regarding credit and debit cards did negatively impact the company's income. However, the full impact has been fully captured in FY25. And lastly, the key positive trigger that could be a boost for SBI Cards is any potential cut in RBI's policy rate.
Okay, so SBI Cards, I think SBI Cards definitely off its highs, pull off the intraday, yeah, it's come off its highs. The note was good, the update's looking good. I mean, Hemen, are you looking at any of the financial space as a potential, any view on an SBI Cards?
SBI Cards doesn't look bad, Tamanna. Yeah, underperformance has been there for a long time. It peaked in September 21 at 1165. Since then, it's been on a downward spiral. Couple of things. Firstly, 650 is rock solid support. This support, or maybe 10 rupees here and there, this level has worked for at least 1, 2, 3, 4, 5, 6 times. So one, I believe that is a significant enough support, which would in all probability not be broken in the near term. That is the case as a supply line coming in right over the last 4 years, from which it has just come off. So frankly speaking, a base formation is in place, Tamanna. Downside does appear limited, but whenever a trend is turning, it takes time. So it's struggling, but the downward momentum has stopped. It's flattened, and now the next thing would be on the upside. So I would be more positive than negative. If you want to play it safe, you buy it only on a monthly close about 764. Otherwise, I believe the worst is almost getting past us.
Okay, Siddharth, just a word from you on the financial space. I'm sure you addressed this earlier. But, how are you looking at the kind of updates we've seen so far? HDFC Bank, Bandhan, Bajaj Finance, all of them looking good. And if there's any view on an SBI Cards?
So I think some of the NBFCs have reported a bit, I would say, in the face of what the banks are reported, a bit resilient numbers, but again, not that encouraging so far, apart from, I would say, an IDFC First, which was somewhat better than expectations. But I would say that mostly the banks, the NBFCs, not that great set of numbers. Even say SBI Cards recent track record has not been that great. We have seen market share in the spends have declined in the recent period on back of moderation both in corporate spends as well as increasing credit costs in the retail side. However, given the space that they are in, they are the second largest player in the card industry. Digital adoption and new business opportunities such as the introduction of credit on UPI, that could lead to a growth in the overall business, and hence we see that FY26 could see improvement or recovery in terms of growth and in terms of ROAs. So while our rating continues to be a neutral on SBI Cards, I think these are good levels, and entering into FY26 we could turn positive. But one needs to have patience and hold it from a long-term perspective.